buy the house now while sellers are motivated, while sellers are giving huge concessions. Have them pay for a temporary rate buy down. And then if rates do go down and we can reduce your long-term rate, we'll refinance you for free. No lender cost.
From the grit and the grind to successful minds. Live from the entertainment capital of the world. Your hosts, Jillian Batchelor and Daryl Hannah.
Hey guys, hey, it's Jillian Batchelor.
And Daryl Hannah with the Batchelor Hannah Group.
And Daryl, what are we doing today? We're on Vegas Real Talk Podcast. What are we talking about?
We're talking about the latest news in the real estate industry, mortgage industry. It's
Yeah,
a new
we need
year.
a market update.
Yeah, we
like
need to
everyone's
know what is
asking,
going
do we
on.
buy now? Do we buy later? Where are interest rates? What's happening? Is the world caving in? No, are things good? Are the buyers picking back up? All the things, right?
Lots of misinformation out there.
So much misinformation.
Yeah.
And we are here to burst that bubble.
Yes.
We're about to tell you guys what's really happening. We're going to give you the lowdown. You guys ready for it? All right, today we have our special guest. We have Jon Gedde with SimpliFi Mortgage, the owner, the CEO. He's like the chairman of like Nevada Bankers Mortgage Association. Good looking guys. What are you the chairman of?
The Nevada Mortgage Lenders Association.
Same thing, guys, same thing. And Michael Harrington. Michael,
Hi.
my good looking friend. Michael, what's your title? What do you do for us?
I am the Chief Sales Officer for SimpliFi Mortgage. So
SimpliFi Mortgage,
Bam.
best mortgage company in town, you guys.
These are facts.
Definitely facts.
Definitely the best looking mortgage company in town.
I mean, for real. I mean, I'm the only female in the room right now, but I'm kind of like blushing. All right, you guys. I feel it. So we want to go ahead and give some updates on what's happening in the real estate industry. Everyone keeps asking. It is a new year. You know, new year, new me. No, new year, new time to buy. Right?
Yeah, new year, new time to buy.
So, Jonathan Gedde, please give us the breakdown of what is happening in the real estate industry and the mortgage market. Where are interest rates today?
Rates have come down a little bit. They got as high as like 7.25.
Wait, did you guys hear what he said? He said rates have come
Like
down.
a bell
Rates
or
have
a
come
gong
down.
or
Bell.
something. Yeah.
Yes. Say it again, Jonathan Gedde, for those in the back.
Rates have come down a little bit. It's
Hell
very
yes.
exciting. Rates had gotten up to as over 7%. They were about 7.25 at one point.
Which isn't terrible, but we just weren't used to it, you guys.
Yeah, it was a big change
It was
from
a big
where
change.
rates were. Rates were very, very low, extremely low, artificially low, which was they were forced down by additional bond spending by the government that pushed rates even lower than they naturally would have been. So to adjust back up to a normal level, which is where they are now, around 6%, was a shock to people, especially when they went to 7.25. It was a big shock. People weren't used to that. They were used to a payment on.
Well, basically, in a blink of an eye, it went from 2.5% to 7.5%.
It felt like that.
It felt like it was like overnight.
sure.
Yeah.
Yeah, it was a very, very quick increase, historically speaking. So caught a lot of people off guard. But we are in a very normal interest rate range now. The 30-year fix is averages over the history of it about 6.5%. So we're actually under that now. We're about 6%.
So you heard it first right here. The rates are low right now.
So if we're at about 6%, now you guys, let me also put a little caveat out there. Not all lenders are created equal. This lender can tell you that they're about 6%. Another lender's telling you 6.5 or 7. Get a quote. Talk to your real estate agents, which would be Daryl and myself, and make sure that they get you with a good lender that has the best rates out there. Now, but guess what, you guys? Here's the shocker. They're even better than 6%. How is that the case?
2-1 buy down.
And a 3-2-1 buy down, and a regular one buy down, and all kinds of buy downs. John, tell us what the buy downs mean. What does that mean for the average person on the street that's not in the industry every day? Can they get a rate in the 3s?
They can. They can get a rate that is temporarily in the 3s. So let me explain. If you qualify for, let's just say, a 6% rate, but the seller is offering incentives and they want to help you get into a more affordable payment.
Which almost all sellers we can get to do right now.
Absolutely. It's definitely
the
a more balanced market, even maybe a buyer's market in some areas. So sellers are willing to contribute to closing costs, and they're willing to do things like pay for a temporary rate buy down. So a 2-1 buy down, if you qualify for a 6% rate, the first year you're actually going to have a 2% lower payment. So you're going to be paying on 4%. The year after that, it's 1% lower, 2, then 1. So you're going to be paying on 5%, and then only after that do you pay on your normal 6%.
But we wouldn't let you do that. We would refinance you out, you guys, in the meantime. And
That would be the
SimpliFi
plan.
Mortgage is offering for our viewers and listeners only, well, not really, but let's just pretend, that our viewers and listeners only can get a free, you heard me say that word, free refinance in 18 months. If you close a SimpliFi mortgage and the rates go down where it's affordable and reasonable and equitable for you to refinance your home, they're going to give you a free refinance with them within the first 18 months. Is that not amazing?
That is amazing.
Because you know what that does, Daryl? That takes the risk out of the buyer saying, I don't want to buy right now. What if rates go down? Well, what if they go up, you guys? Let's all come in low. Let's get it done. And let's get a free refinance within 18 months.
Yeah.
I love this.
Yeah. Well, I mean, and obviously the election coming up in 2024, no one expects rates to go up before an election.
They generally don't, you know?
Generally not. And the whole point of what the Fed is doing with interest rates, raising the federal funds rate and pushing the rates up across the board, is to slow the economy down.
Cool off inflation.
What happens when the economy slows down? They do the opposite. So we're seeing some signs that the economy is slowing down. Wage increases were way down this last month. So everyone in the mortgage world, everyone in the financial space is assuming that interest rates are going to be lower 12 months from now than they are today, which is why my company, SimpliFi Mortgage, is offering a free refinance in 18 months. We don't want buyers to think, oh, geez, I need to wait until rates go back down to buy. Buy the house now while sellers are motivated, while sellers are giving huge concessions. Have them pay for a temporary rate buy down. And then if rates do go down and we can reduce your long-term rate, we'll refinance you for free. No lender cost. Yeah, there are some other costs that might be involved, but we'll take care of all lender fees.
But they're minimal, for sure.
They're very minimal.
So, Michael, when you hear this brilliant man speak, break it down to us. What are you hearing him say?
Well, I also want to bring up a very important part on that temporary rate buy down.
Okay.
If rates do come down and you have the ability to refinance.
Wait, I like to say when rates come down. Yes.
Rates come down.
Okay.
You have the ability to refinance, and any of that unused prepaid interest is returned to you, the buyer, in the form of a principal reduction.
Wait, I love this, you guys.
So let's just say, let's
That's
paint
awesome.
a picture right now. $10,000 for a temporary rate buy down on a 2-1. You only use half of it, so that's $5,000. Now you do a refinance with us, free within that 18-month window. That $5,000 that's remaining comes back to you in the form of principal reduction. So it's not a use it or lose it scenario with the temporary rate.
Wow,
So
that's the
you're
first
telling
time
me-
I've heard that.
I didn't know that either. So you're telling me there is
That's
literally
awesome.
like no risk to the buyer. I mean, there's nothing that's zero risk, you guys, but it's very, 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 very low risk. I mean, unless something crazy happened and interest rates just went to 2% tomorrow. But again, then you would just refinance anyways, right? So
I
buy
mean,
the house.
Here's the risk that I'm telling my clients: waiting. If you're going to
Yes.
wait
Don't
for the
wait.
rates to come down, which we know there is a lot of people doing that. The reason why sellers right now are making such amazing concessions and they're paying all this closing costs and doing everything is because the inventory is so high.
And because
right?
rates are up and rates
so
go down, they're not
at
going to do
some
that.
point, buyers are going to figure out that, hey, 6% is the new rate. It really is what it has been for a very long time. I can get out and start buying. If that inventory goes away, then you're going to start seeing sellers not making those deals.
Seller's motivation
They're
is
not
going
going to be
away.
paying concessions.
Absolutely.
And it doesn't need to go away completely. I mean, if we cut the inventory in half, you're going to start seeing less deals. There'll still be deals, but right now the deals are insane just because of how high the inventory.
I mean, they really are. I mean, Daryl, there's new homes. I mean, we had a client looking at a new home community that in February of last year, so we're almost a year later, okay, those homes were waitlist only. They were pulling a name by drawing. The houses were $900,000. The lot premiums were $50,000 to $100,000. Then you still did your upgrades. So you were closing at well over $1 million, probably about $1.1 million when you were closing, if you got lucky enough to even get the house. Remember, Melissa, one of the agents on our team, the base price of the house was $850,000. You had to go in with a blind offer. Her client offered $950,000 and didn't get it.
$100,000 over,
Didn't
and they
get
told
it.
them to,
They were not the highest
scram.
one. The highest offer was over $1 million. Now that same house that the base price was $850,000 is now at a base price of $785,000, and they take an offer of $750,000. So the client a year ago closed for over $1 million and now can buy that same house for $750,000.
For $250,000
You guys,
less.
Huge opportunity here. So yeah, I mean, don't let the rates hold you back. We definitely don't want to let the rates hold you back.
Yeah.
There's just so much opportunity to be had. Jon, tell us some other things that are happening in the economic world, because you look at things as a big whole picture. You don't just look at what interest rates are happening. And I definitely want to make sure that you hit on the biggest misconception out there is when people hear the Fed say, oh, we're raising rates. That doesn't always mean the interest rate goes up. Why? What does that mean?
Yeah, that's a great question and something that's very commonly misunderstood. Everybody hears the news about, oh, the Fed is going to raise interest rates, and they assume, oh, that means that my mortgage interest rate is going to go up if you're about to apply for a loan, or your auto loan rate is going to go up if you're about to apply for an auto loan. That's not the case.
Wait,
especially
why?
in the mortgage space.
I don't understand that. And the world doesn't understand that. And I say that, you guys, actually jokingly. I do understand it. Daryl understands it. But I say that jokingly because most people
don't.
99% don't understand. When the Fed says we're raising the rate, that doesn't mean interest rates are going up. Explain that, Jon.
That's correct. When you look at how interest rates, how loans are funded in the mortgage market, they're funded by bond investors. Okay, bond investors buy in. They want a certain return on their money. Then Fannie Mae securitizes that money and gives it to us, the lenders, to lend out to people. That's kind of how it works. These bond investors are looking way long term. They're looking 6 months, 12 months, 2 years, 5 years down the road to determine what return they want on a long-term bond, which is what they're buying. So when the Fed raises the rates, the investors have already calculated what the risk is of the Fed doing that many months in advance. There's actually charts that predict how much the Fed is going to raise their rates, what the terminal rate is, meaning where they're going to stop raising rates. All those things are baked into the pie long before the Fed makes any announcement on interest rates.
Wait a second. So what I just heard him say, Daryl, I need you and I to recap this really quick. What I just heard him say is that there actually is some prediction. Again, no one has a crystal ball, and we can't say exactly, but there is some prediction that a good informed lender will know months in advance if interest rates are going to go up or down. There's some indicating factors, right? There's some prediction, there's some correlation there. So it is really not that risky to buy, like, oh, our rate's going to drop tomorrow. Yes, the general public doesn't know that. The general, a person that's in a different industry doesn't know that. But a good lender will have some of those general predictions and be able to tell you, again, no crystal ball, but hey, I feel pretty safe the rates are going to be here. And I feel pretty safe the rates are going to be here. All 2022, we were telling clients, the Fed has said they're going to raise rates, the interest rates are going to go up, and everyone was like, no. And they did, you guys. We were told they were going to be raised 3 or 4 times. I think they were raised like 97 times. So because those indicators are out there, you guys, so there is some information. Now, if you
generally speaking, kind of where it's headed. Because I remember last year you were telling us like they're going to go up.
Yeah.
Now, if you're a seller, because we deal with a lot of sellers, so they don't. SimpliFi Mortgage doesn't generally, but we deal with sellers. And when sellers say, I'm just going to wait. I'm going to wait to sell my house. I don't need to sell right now. I can sell it in 6 months. Or what about when the sellers say, I'll just sell it in a year. I'll put a tenant in it and I'll sell it in a year.
Yeah.
Well, so if you would have done that in June, now I know we're not a year yet, but we're already in January. If you would have done that in June, said, no, I'm going to wait for prices to go back up. I'm just going to put a tenant in it. Just in the last 7 months, on average, you lost 15% value on your home. So you might have made enough money to cover the mortgage, and maybe you made an extra couple $100. Maybe you made an extra $500 a month, right? But even on a $400,000 house, $500 a month is about $600 or $6,000. In profit. That's not even 3%. But if you lost 15% in value, you're so negative now by making that decision, thinking I'll just wait. Cash out now. Do the deal now.
Well,
prices
if you
will
need
go
to.
up.
I mean, there's some sellers that can just hang on for 20 years.
If you can hang on, I tell people this. We have no crystal ball, but the market needs to stop adjusting and then level and then go back up. Because we did decline about 15% on average throughout the valley, if you would probably need to wait an average of about 5 years to go back to where prices were. It's crazy to say
that's what I'm saying. Like if you need to sell in the next year or two, you do it immediately.
Yeah,
but
even
if you
in
can
the next
wait,
3,
wait. I mean,
even possibly in the next 3. Again, no crystal ball, but then you should probably wait. But do it then. But if you can't, then you should probably wait. If you have 5 years, wait. If you have 10 years, wait. If you're like, hey, I don't care if this house sells, so my kids graduate college and my kid's in 2nd grade, you're fine. Then we will tell you to wait.
If you were looking to take advantage of market conditions, you missed your window. That's I think what you guys are saying.
Yeah.
So now get on the boat as quick as you can.
Your opportunity to sell at the absolute peak is gone. So if you're looking to get out of your property, it's still a good time. Values are still way up, even from 2019.
If you look at like where they were, this is the way I do it. I say, look, everyone's like, oh my God, 10 or 15. I'm like, look, but your value went up 30 or 40% in the last.
Yeah, so you're
3
still
years.
up.
Right.
You're still
You're
up.
still up, right?
Yeah.
I mean, I know you lost. You're not going to be able to get this big number, but you still have a good chunk of equity in your property.
Yeah.
Sure.
It hurts. I get it. I just comped a guy yesterday. He could have sold his house 6 months ago for about $750, and he'd be lucky right now to get like $625 out of it. Yeah.
And that's the thing. And because you guys, we were in a crazy, unrealistic, inflated market. Now we're leveling out.
Yeah.
But let's look at this. if you're looking to upgrade, let's say you got married, you're going to have some more kids, or you just want a bigger house, you got a better job, whatever. You're looking to upgrade. And you want to sell the house that you're currently in or get out of a rental. Even if you're selling the house you're currently in and you're losing 10% from what you could have gotten a year ago. And that house is $600,000, so 10% is $60,000, right? But you're going to buy a new house of, let's say, is $700,000 for easy numbers. But that house is also down, let's say 10% just to keep apples to apples. But now you can also maybe negotiate with the seller to get another 10% off. So now you've just saved 20% of $700,000, which is $140,000, right? Yeah, maybe you lost your 10% on your house, $60,000.
You can definitely make it up.
So
on the
140
purchase.
minus 60, you just gained $80,000. Okay, this is just an example. And even if it was 15%, okay, so you gained 30, 40,000, whatever it is, right? But there is a way to make it work. Now let's say you want to downsize. Talking about downsizing. You want to cash out of your house, you want to downsize and buy something smaller. But now again, take advantage while the sellers are more negotiable, because when inventory cools down and more buyers come out, the sellers are going to be way less negotiable. So it's still, if you strike the right deal, the opportunity is there.
Oh, for sure. Yeah, you can definitely make up your losses on the purchase all day long right now.
So, John, what else would you like to tell us about the economy as it stands and where you see things going? And
Yeah, I mean the economy is doing what it's supposed to do when the Fed raises interest rates a lot. It's slowing down. It's cooling off. Whether we're currently in a recession or we're about to be is debatable. Yep. But everybody believes that's paying attention believes that a recession is coming, if not already here, and that's going to mean some job reductions.
What do you think, John? I mean, I think we've been in one. And no one just wants to admit it. But.
I think we've been in one for a couple of quarters already, and the numbers say that as well. Yeah. But it's been so thin that it wasn't really easy to call.
So, Michael, I would say this. I mean, I know you get out probably about as much as I do. I mean, I would say the only city that's probably not in a recession, you guys, I say this as a joke, is Las Vegas. Because have you seen the Strip lately?
Oh, yeah. I mean, people still love to come to this city. They love to party. This is the entertainment capital of the world. Nothing about what's happening in the rest of the world is going to ever change that.
Yeah.
Outside of COVID, when everything was completely shut down, I mean, this city is always, as soon as it was open, it's rocking.
Well, you can't even, so I've been using the example of can't find a parking place at the airport. But if you tried to go find a parking place, even in like the parking garages at the hotels,
oh my gosh,
at the malls, like the other day at the mall, I couldn't find a parking spot.
Continually setting records after we open back up. So yeah, this city is alive.
And people are not parked at hotel like casinos and at malls and not spending money.
Oh, of course,
they are spending.
Well,
money.
the gambling winnings are up. I'm sorry, the gambling spendings are up. Like to an all-time record high.
Yeah,
sure.
My grandparents would be proud. God rest their souls.
And it's also important that I think to the viewers out there, recession doesn't. It's such a scary word.
It doesn't mean the world's collapsing.
Yeah, well, recession. There's big, tough, scary recessions, and then there's like light little recessions, right?
Yeah, and let's talk about what that means. We have recessions all the time. There was a recession in March of 2020. The pandemic put us into a recession. The government stepped in and fixed some of that. There was unemployment relief and things like that. In 2008, we had a very different kind of recession. That was a financial crisis.
Meltdown.
That was a systemic blunder across many, many categories, focused primarily in housing. That kind of tipped
that triggered it.
Yeah, that triggered the whole meltdown. That is not what we're going through right now.
Yeah,
we're going through a very natural cycle, economic cycle, where the economy got too hot, values of all things went up too fast, too far, too fast, and the Federal Reserve decided, hey, we got to cool things off. So they're increasing interest rates, which trickles down through all other interest rates, including mortgages and things like that, in order to cool things down intentionally. So when they do cool things down and things get back to a normal 2% inflation target, which is what they try to get to, then they have the mechanisms to do the opposite, reduce interest rates to spur things back on if necessary. Yeah. So it's very normal, very healthy thing for a market to go through. Don't be scared about it. This is a great time to buy because there are a lot of sellers that are scared.
Yep.
They don't understand the data. They don't understand this is normal, and that getting a 35% increase on your house value in 1 year is not normal.
It's not healthy. We actually can't keep that up.
And I like the word healthy because everyone's so freaked out about that. I'm like, This is like, it just feels more normal.
Yeah.
Can we just stop calling it a meltdown and a bubbles
It's
bursting?
just it's
And
not so crazy right
Yeah.
now.
I'll give you a great example of why it is healthy. And you mentioned that inventory is high. And yes, if you look compared to last year,
Or the last couple of years, it is high. It's double
quadruple.
or triple or quadruple in some cases in some markets where it was. But it's not actually high. The inventory level in Clark County is the same as it was in 2019. Nobody was pulling the fire alarm in 2019 about, oh my gosh, the world is crashing.
Exactly.
We're at the same inventory
8,000 or
level
9,000 homes really at the end of the day is not like a ton.
No, it's not a ton. We're still less than 6 months of inventory on the market, which is still technically a seller's
Still
market.
technically
Yeah.
a seller's market. Yeah.
But obviously there's different factors that go into that. But it's a very healthy, natural correction for this market to be going through, and for the real estate world in general. We're getting back to normal. That's all we're doing. And if you're a buyer, don't sit on the fence anymore. Take advantage of these massive sellers concessions that some sellers are willing to give you. Take advantage of interest rate buy downs, temporary interest rate buy downs. Take advantage of free refinances that we're offering, because we do expect that interest rates are going to go down when the economy does slow. And if that happens, if we get down to a low 5 or mid 4% interest rate,
There will be an interest rate refi boom.
we'll get you out of that. We'll drop your payment permanently on a 30-year fix, and you're good to go.
And if
Yeah.
you SimpliFi, you get that for free.
Absolutely.
Boom.
But I mean, just more value the Bachelor Hunter Group is offering, you know. Hey, so Michael, so I want to ask you a question because I know that you've seen this. So I would say, at least for us and a lot of our counterparts, a lot of real estate agents in the Las Vegas market were saying that real estate was very, very slow, October, November, very, very slow for October, November. But I will say we saw a big uptick in December and really good uptick in January. Are you seeing more buyers reach out to you to get pre-approved? Are you getting more leads from other real estate agents? Are you seeing an uptick as well in the real estate market?
I am seeing a lot more interest right now.
Okay.
Even if it's just having an additional conversation, maybe somebody who wasn't curious, now they're starting to pay attention, right? They're looking at their peers. They're starting to, look at good sources of information and then let their brains start to tick in there. So I am having more
And more buyers getting-
valuable conversations and more people interested in getting that loan application.
Yeah.
And here's the thing. If you're curious, we can set you on the path to home ownership. It
Yeah.
doesn't mean you have to be within your 30, 45-day window. We can go out 6, 8, 12 months. That's completely fine. But start with the conversation, lay the groundwork, allow us to help build that foundation, and we'll get you on that path to home ownership.
Well, and actually, I'm really, really glad that you brought that up because that's a really good point that we should need to make for some of our clients. So I had a buyer. You guys did the loan for them. They're buying a new home, and they wanted to lock the rate. And a lot of people don't know you don't have to do your pre-approval process 30 days, like you said, before closing. They were like 6 months out. They locked the rate with you. They did a much longer term rate lock than the normal buyer would typically do. And it was to their benefit because they got a 30-year fix in the 5s, where today they wouldn't be getting that. So there was no interest rate buy down. It wasn't like a temporary buy down. It wasn't like a 3-2-1 buy down, 2-1 buy down. So if they wouldn't have gotten with you early, they wouldn't have had that.
Right.
So even if you're thinking about buying a home in the next 1 month, 3 months, 6 months, even 9 months, get with the lender now, let them put you in their system. And sometimes there's certain things on your credit that you don't even know about. Oh, so I have a story actually we should tell about that. We had a buyer that went to get approved with you guys, thought her divorce was finalized a year ago, thought she was totally divorced, come to find out the paperwork was not ever actually signed off by a judge. So had she looked at that like the day she wanted to buy her house, basically go into escrow, who knows how long, her ex was military, was overseas. We had to get documents back and forth. It takes a lot longer than you think. So you just never know these weird, kitschy situations that can happen. So it's really important that they get with you guys first. Let you guys do a deep dive. And sometimes there's also little simple things on their credit that you can tell them, hey, pay off or don't pay off or make payments or don't pay this off. Because if you do start making payments on this, some people think, oh, I'm going to start paying off this old medical collection. No, that's going to drop your score. Just let it be, or you can settle with them. You guys can give them a whole plan, which I think a lot of clients don't know about, right?
Absolutely.
Right. Yeah, you want to talk to the professionals, and we also have a couple FICO experts. One of them is next to me here, and Betty Salas, who's our team originator. She is absolutely incredible. When people are curious about their credit, we do simulations. She's seen enough that she can tell you, hey, leave this on there even though it's negative, because if you do something with it, now you're going to see your score drop even further. So always trust the experts.
Well, and I'm glad that you
There's a lot of
mentioned that.
counterintuitive things with credit reporting specifically that people don't understand. They're like, oh, I have that bill. I totally forgot about that. I'll go pay that off. Sometimes the answer is don't do that. That will actually make your score worse.
Which will make your rate worse.
Yeah, and according to Equifax, over 25% of clients have errors on their credit report.
Yep.
So we routinely have clients come in thinking, I'm going to have no problem at all. I'm totally golden. I'm submitting an offer this afternoon. And we find that there's problems that they weren't aware of.
And the one thing I want to mention about that, too, and I know Daryl and I have had this experience, that's also why I would caution any buyers out there. You see these commercials on TV, and they're these big nationwide companies. I won't use any names because I don't want to talk bad about anybody, but it's like, get a pre-approval in 5 minutes and lenders online, whatever. So you get these people, they log online, they go to a website, they fill out like 6 questions, and they spits out a pre-approval. You guys, that is not a pre-approval. You are not approved for a loan. They're basically giving you like a very basic watered down pre-qualification. They haven't looked at your tax returns. They didn't do a deep dive. They didn't have time to pull your credit in that time, or they're looking at a top level. You might even get a pre-approval. They might even really be able to approve you, but give you a much higher interest rate because they didn't look in those errors. And so it's really important to have a human, not a computer, tell you if you're actually approved, what the situation is, get an underwritten approval. And that's why when you have this team at SimpliFi, or really just an actual human that's going to be able to look at it, and an expert, not just a human that like, hey, is a loan officer for the last week, but an actual expert that says, hey, if we just tweak this one thing right here, you're going to be in a better position. Would you agree?
100%. But I think it also goes much further in that you need to talk with somebody who's local.
Yes, knows your market.
Because you could be talking to an expert, knows his stuff, but he's in Chicago, doesn't know our market. Because there's so many issues that come up in a real estate transaction that require local knowledge when it comes to values and it comes to issues, right? Because you get some guy in Chicago wants you to get where's the termite inspection report? I mean, I've just gotten these questions from guys that are out of state, and it's like,
absolutely,
you need somebody here local and in person that you can talk to, and you could go, like, it's just, I think it's important.
You want to be able to go see somebody in person if something goes wrong.
Yeah.
You don't want to be talking to somebody on a 1-800 number that's 50 states away or not even in the same country.
Well, and a lot of times you get, like, some of those big mortgage companies online, you get a different person every single time you call.
Or you
don't have a
talk to
central point of
somebody who's
contact.
like in India.
For sure.
Because they have these call centers that, handle it. And it's like, dude, it's a mess. It can be a mess.
It can be a mess. I'll give an example of how it can be a mess. We had a client, a good friend of mine, actually, that closed on a property. We closed the loan for him on a property a couple of months ago. During the underwriting process, we found that the tax records, the county had actually recorded the property as a different type of property, which is a total deal killer at 99% of lenders.
Yeah.
But we talked with the underwriters. We figured out what the true issue was. We went and solved that problem. We talked to the county, had Clark County go out to the property, take a look at it, and
Gedde flex.
Yeah.
and change the recording so that it was actually the right type of property.
Try to get that done with some Rocket Mortgage guy.
Don't use the names. But yeah, any companies like
Sorry,
that.
Rocket Mortgage. I know you. I love you.
You guys are great. You guys are great. So, and then here's the other thing about some of those big companies too. Some of these loan officers that they have are paid only based on volume. They have to hit a certain number of deals. They have to do 100 transactions or 200 transactions in order to even get paid their actual like full salary or bonuses or things like that. So a lot of these guys are just cranking them out, and it's like, look, if this isn't a simple deal, I got to just cancel it and I got to move on to the next one because they got to crank out so many big numbers every single month in order to get their sales calls. So they don't even look into a deep dive of a file. If it gets complex, if it's a little kooky, if you need someone to refile their taxes or fix something or re-record a deed, they don't want anything to do with that because they're not. That extra time is going to take away from them doing 5 more files.
Yeah, in my experience with those type of lenders is everything's great until the end.
Yeah.
Or
you get towards the end. Yeah, you get to like the 3rd week in a 4-week escrow process. And it's like, well, yeah, we got a red flag here. You're like,
You're like, how'd you not know this? Okay. All right. So enough about the mortgage industry. I want to talk about something fun. I want to help all of you gentlemen out there right now. You guys, today.
Why just gentlemen?
Well, okay, we'll help everybody out. But today, we're in the middle of January. We
Looking
got
out for you,
Valentine's Day
ladies.
coming up. We got some red here on our table to try to show you guys that Valentine's Day, the love day, is coming up. And we know that most men out there are confused on what to do with their ladies, what to do for their ladies, what to get them, where to take them, what to do for Valentine's Day. So today is January 10th. You still got a little over a month to get those reservations out there. So I'm going to ask all of the gentlemen in the room, favorite restaurant to bring your lady to. Doesn't have to be anything super fancy, okay, but don't pick McDonald's, you guys. Don't pick like Cafe Rio. She doesn't want that. We want to know, B, what you should buy your wife or your girlfriend. C, if you were to take her to a nice hotel or like a casino or a show, or you want to stay the night as a staycation, where would you take her in Vegas? Daryl, Hannah, Banana.
I'm first.
We're gonna go to
I'm
you
answering all
first.
three.
Yeah, favorite restaurant, what you should buy your wife, and where you would take her, what casino if you want to see a show or a stay.
I'm gonna go Michael's.
Oh, you're going with the bougiest. Okay?
Michael's. This is just one of my favorite
So,
restaurants.
men, that's if you have some money to drop. Okay.
I got to go maybe with jewelry, a nice watch.
Okay. And then what about
And
hotel for a show or
Wynn.
or a stay? Okay.
I've stayed almost in every hotel, and Wynn is amazing.
All right. So we're gonna go to Michael next. Michael, yeah. Okay.
So first and foremost, our staycation is going to be at the Delano,
Okay.
and we are going to dinner at Vic and Anthony's downtown.
Bougie. Okay, keep going.
Yes, my favorite steakhouse.
'Kay.
Always old school.
You haven't
Where's
taken.
Vic and Anthony's?
That's in the Golden Nugget.
You haven't
Golden
taken.
Nugget,
You haven't taken me. Go ahead and take me. Okay.
Dim lit. It's perfect.
Have you been to
Okay.
Excellent
Michael's?
spot. Yes, of course.
Okay.
Okay. Keep going.
I got to go to Vic and Anthony's. I've never been.
And then what are you buying
And,
your girl?
So yeah, you can never go wrong with jewelry. Yeah, probably rose gold and diamonds. That gets the job done.
Okay. And
Always.
Mr. Gedde, give us drop it down.
Oh, this is kind of interesting right
so
now.
here's a tip for all the gentlemen and ladies out there. If you're looking for something for your significant other, call their best friend or their sister or their mom. They know better than you do. Unless you're super, super attentive, call somebody that knows.
Okay.
But for my girlfriend, Cleaver is the favorite restaurant. The staycation or the place to stay would probably be the Cosmo.
Okay.
And
so well.
one of these.
Oh,
You
little
can't
dogs.
see this.
You guys can't
it's a
see.
tiny little puppy.
Oh,
That would definitely be the right up the alley for my
Oh
girlfriend.
wow, what a good boyfriend
Going
that
with a
guy
heartbeat
is,
for
huh?
the,
Yeah, I'm loving it.
It kind of just spoiled it, right?
Strong.
Like,
Spoiled
you know
it.
what's coming now.
No, I'm just saying that would be a good gift, you guys. All right, I'm gonna give for any of the married men out there. I'm gonna give you guys from a past wife that was married for a long time. I'm gonna give you guys a couple more little hints. Okay, take it from me. Your wife wants a day without the kids in the house. Take the kids out of the house. Give her like an afternoon alone. She wants an afternoon by herself.
Mm-hmm.
Get her a massage or a spa or a self-care day. Nails done, hair done, something. Every woman likes flowers, even if she says she doesn't. Okay. Every woman wants a handwritten note, handwritten card, note. Don't just write "Love Daryl," right? Nice
I always do
boobs,
handwritten
love
notes.
Daryl.
I always do handwritten.
Do something a little bit more than that, you guys. Get a little creative. Why I love my wife. Give like 2 or 3 reasons, okay? And then just anything that makes her life easier. Plan a date. Plan something nice. Dress up nice. Open the door for her. Daryl's a big one in
Always.
opening the door. Daryl, we had a friend who brought her boyfriend for the first time ever. We go to meet the boyfriend. Daryl goes, I don't like him. I go, well, you don't even know the guy. He goes, he didn't open the door for her. I don't like him. You remember?
Yeah, well,
And he was
2 or 3
right.
times in a row.
Yeah, so
He
he was
just
like,
walked
done.
right through the door and let her walk in. Like I was like, no.
He didn't. He didn't open the door for her. Yeah. And so just do something nice for her. And you guys, if she has little dogs, just a little hint: buy clothes for the little dog's dresses. I mean, I don't know where that would come from, you guys. I have no idea. Amazon. It's fine.
And if they have 5 or 6 little dogs, buy 5
clothes.
or 6 little.
And then if they do
outfits.
have multiple little dogs, like I have 3 little dogs, make sure all their little dresses match each other. They should be in
have to
coordination.
All about the
match?
coordination.
Yes.
Oh my God, why?
And then
You
do
guys-
a photo shoot. It's a whole thing.
Yeah.
Yeah.
This is why we're Vegas Real Talk. You guys, we talk everything about Vegas, all kinds of real estate, all kinds of Vegas things, restaurants. And one more thing I want to lead with. Vegas is still booming. Look at MSG. MSG, the Madison Square Gardens that we are building in the Sphere here in Las Vegas, that never stopped construction during COVID. It has never stopped construction. They are about to open up in a few months. About a handful of months, they're going to open up here in Vegas. It's going to be the most legit, the most elite, the most technically savvy, any kind of concert venue out there. It is going to be the place to be. LED screens on the outside, LED screens on the inside. The best sound system to be.
Can't wait to see.
Vegas is booming.
Yeah,
Show in
if you guys don't know about the MSG Sphere, look it up. MSG Sphere. it's going to be incredible. It really is.
Incredible. All right, Michael, want to drop us with any last little tidbits of knowledge?
Yeah. Like I said, just double back to the deal. Talk to an expert. If you're curious, reach out. That's the first step.
All right, guys. Well, we appreciate you, Jon Gedde and Michael Harrington with SimpliFi Mortgage. We are Jillian Batchelor.
And Daryl Hannah.
We appreciate you. See you soon. Bye, guys.